What's up, everybody? Art Turner, Data Productions Media. Dreams are tangible aspirations where we scheme our dreams into existence. I have a banger video for you guys today. Usio Inc., ticker symbol USIO. We're going to be breaking down the 2024 10K annual report. It came out late March, I think March 26th. They dropped a conference call that I've listened to many times, probably close to 10 times, just to make sure I got all the information I need for myself, but also do a video to help everybody else educate themselves on the company. It's going to be a banger video today. I have my research. I have the PowerPoint presentation that they dropped. We're going to be reading some things off that, discussing that, and we're going to discuss Litchfield Research's data points on Usio. They just updated that recently. They have their buy target. So we're going to talk about that as well. If you don't already, please subscribe to the channel, like the video. If you like my notes I take, I have a Patreon where you can get all my notes in a PDF or PowerPoint form so you can educate yourself on gematria, the stock market, investing. I'm not a financial advisor, but I do like compiling all my notes, and this spans years. This goes back to 2021. So it's it's just a bank of knowledge. But thank you guys for being here today. I've been in Usio for since the beginning of the year. I've done a video on them before, so this is going to be my second video on them, and I'm excited and what the company has been doing. Okay, and so just getting right into my notes. This is all from the conference call for the most part, and some filings. They repurchased 1.5 million shares of its stock in 2024. They have a buyback program, which is amazing. And I'll bring that up now. They spent 1.5 million in stock repurchases in 2024. That was based off a $4 million buyback purchase program. I think that started in 2022. So they finished that up. And so they just added another 4 million to this year, and I think that goes through 2027 or 2028. So they have some good cash on hand, like we'll be talking about. Another big thing on the 10K annual report is Usio One. So what Lewis, the CEO Lewis Koch, was saying, and if you listen to the conference call, which I recommend everybody do for themselves, it seemed like there was a lot of great things, and we'll talk about how this the company has to present themselves in a little bit more of a showman type of way. I think he was getting over a cold in the conference call, but he still powered through. I like him as a CEO a lot. You could tell he had a stuffy nose, but he got everything out that was needed, and I could pull a lot from him. But he unveiled the new Usio product. And I think it's going to be a really good one. It's called Usio One. So the Usio One is going to unite and integrate all the products they have: card issuances, PayFac, payment facilitation, ACH, and their output solutions with electronic billing and such. So that's going to be big. And with Usio One, they're going to have one single IT team, one single security team. So they're really consolidating everything. And I believe they're getting that from the bigger dogs. When I look at SoFi and Robinhood, and they're financial technology companies too. I'm invested in SoFi. And I think what Usio is doing is on a smaller scale and a different clientele. Like they'll have some overlap, but SoFi is going for institutional type of people. Robinhood's going for retail, brokerage, but Usio, I think there's really a big market for mid-sized level businesses, government institutions that don't municipalities, smaller government level institutions, law firms, medical practices. That's a huge market share that they can get with these payment and financial technology services. that the big dogs aren't trying to get themselves, but they can use a lot of the concepts. And the Usio One concept, I think they're getting that from like Galileo and SoFi, where they're having a lot of things in the house. You know, not only can you do your banking, you can do card issuances, you can do brokerages. But for Usio, not only you could do your card issuances, you could do ACH, you could do payment facilitation, and this is all going to be on under Usio One now. It's going to be a lot easier to package to a potential ISV or a customer. And it just already it lessens the friction to get more people, like new branches within the system, right? Lewis brought up on the call is that they have so many card issuance is deals they have, right? But only 4 of them have ACH. And so that alone is a growth factor for the company. How many of those can they just add that extra portion to it, just for a little bit more of a nominal fee for the whole service, right? And you're providing value to the customer, but you're also providing value to the shareholders for more growth. So they're thinking a lot of good ideas, and I agree with quite a bit of it. New client onboarding, once again, it's going to be a single application, so everything is just getting streamlined, which I really enjoy it. Everything's getting streamlined. The PayFac growth is up 29%. That's a huge driver. It's still building up, so it costs some money still, so the margins aren't the best right now, but the growth is there, and it's great to see. They talked about they're looking at 14 to 15% growth target for revenue in 2025, which is good. And we'll get into like the revenue portion and stuff like that. They just now made it back to where they were because they had that one-off client with COVID, which jumped the revenues up. Not artificially, but just not on the typical trajectory of where they are at. But now they already match that. So now we should be back on the growth path. Like they figured out how to gain all that money back from that one-off deal closing. Practice Suite, they have Practice Suite as an ISV, which I would look up Practice Suite. So they're a medical like billing service, and so Usio's behind that. Look at their website. Do research, do some DD on what type of ISVs they're looking for, and that's what one of the higher markets, right? Medical billing, helping other practices, get their billing in order and such. And do you see SoFi dealing with that, like, with Galileo? No. Maybe for you, like, United Healthcare, Blue Cross, maybe like the larger ones, but not for something like that on a lot larger scale. There's a lot of money in a smaller scale. There's a lot of money in that too. And so I think they're in the right market, and I think they're doing really good things. Disbursements with federal government is always possible. They had that COVID deal over the last couple years. They finally got the last portion of revenue up, but those can always come back in the picture, and some of those can be on a continual basis depending on what program the government would use Usio One for, right? Output Solutions, that's their printing and electronic billing branch of business, which I think, it's boring, but we'll see on the presentation. That's 25% of the revenue in 2024, right? Low margins, but a lot of it's government money, so it's stable money. But also there's a lot of growth in it. There's hidden growth in it too, because all those printed bills with the government still is. And I have a state job, I have a government job, so they're so far behind. I'm still getting like billing, like paper checks, like paper benefits and stuff like that in the mail constantly, which a lot of it should just be online, right? So Usio's they're slowly transferring those type of clients to electronic billing, so they don't have to have the cost of printing out anything. They just bought a machine. But over time, those margins are going to rise, and as they get more clients, they're not even going to set them up for the printing. the physical printing, they'll just get them up for the electronic billing. A lot of hidden growth there. Um, Raising margin, lowering costs. The price to book is 2. All right. The shares outstanding is 26.1 million, 26.61 million. The book value is 72 cents. Obviously, it's a technology fintech company. They don't have a whole lot of assets. They have assets, but not, a whole lot for obvious reasons. Now, we'll talk about what they like to notate in the presentation. The public float is 21.8 million shares. The rest is institutional and insider buying. So the public float book value is 87, almost 88 cents. Okay. And so if you know where the price is around this date, we opened up at, $1.30. We're getting close to book value on a financial technology company. Think about that. And a company that's growing. And so we also have, looking at the 2024 revenue of 82.93 million, almost 83 million. When you base the revenue against the shares outstanding, we have a $3.17 valuation just off revenue. Then when you do the public float, it's a $3.80 valuation revenue against the shares. And then so when we do forward revenue, all right, for forward guidance, and we have it up here too, the projected revenue growth compounded, assuming 15% annual growth. If we're at 2024, if we're at 82.93, in 2025, we're at 95.37, 2026, 109.67, and 2027, 126.12. So if we just take the 2025 forward revenue of 95.37 million, the revenue against the shares outstanding is $3.58, but the revenue against the public float is $4.37. So you see where we're at, and these are conservative numbers. 15% is based off the predictability they see. That, sometimes with unpredictability and that hidden growth in some aspects, we could grow a lot more. So that's a lot. So the cash on hand, again, the reason why they can do a buyback is they have $8 million on hand for cash. They have a positive equity, good assets, and net income, which we need to talk about their net income, right? Their net income, right? The last couple years since 2020, they never had positive net income till this year. So I think that's a good positive, having positive net income, right? So that's awesome to see. Now let's look at some of the gematria, right? We have Usio One's payment facilitation, and Usio One helps multiple expand. That both equals 330 in English ordinal and 123 in reduction. We also have Usio income is positive for 2024, and output solutions, stable money, Usio stock, both equals 133 in reduction. And also Usio income is positive for 2024, 313 English ordinal. We have PayFac, Usio's top growth driver. Usio One will drive growth, stock growth. ACH business helping fund Usio Inc. all equals 137 in English reduction, which is the 33rd prime. So these are all obviously powerful numbers I work with. Then we have Usio, longest tenured NACHA certified third-party sender in fintech industry, 330 English reduction. And then one of the more powerful decodes we have, if not the most powerful we have, Usio income is positive for 2025. Well, bang. I mean, look, we have positive net income for 2024 at 3.31 million, which, that could be seen as a 33, which is positive. I like seeing that. But for 2025 going in now, That's cool to see. Usio's income is positive for 2025. We have 333 English ordinal, 135 reduction, 333 reverse ordinal, 153 reverse reduction. All powerful numbers that if you go back on my channel and you see, it means or insinuates growth, monetary growth. But so that's what I have for Usio annual report from my breakdown, at least. A lot of great positive things I'm seeing. And so now let's go over to their PowerPoint presentation. All right, so now let's look over Usio's PowerPoint presentation. Now, I need to bring this up now. I think a big thing that the company needs to work on is their social media outreach, talking to their investors. They're going to different conferences and stuff like that, but you need to move the needle with retail investors as well. I think Lewis needs to start creating a little bit of mythology about himself, put himself out there a little bit more. You don't have to do anything crazy, but he could just go on a YouTube video and break down this presentation himself. People just want to build trust with their CEO, and that's how we expand the multiple. That's how we get a better valuation. There's just, I'm high on the company, but when you're saying we're only getting, but if you're only getting in the fintech space, if you're only getting 14 to 15% growth the next year, people are going to take their money somewhere else. You could get that somewhere else. So, and it's highly more attractive. Like there's more attractive plays out there if you don't provide the story and you don't get ahead of it. Look at Robinhood, look at SoFi, look at Palantir. Look at any really technology company or financial technology company. The best ones have mythology behind it, at least with their CEO. That's how you expand the multiple. So I think that's one thing they need to work on for sure. So we'll go through Usio integrated payments main simple, April 2025. I guess we'll talk about their about us a little bit. Usio is a leading fintech that operates a full stack of proprietary integrated cloud-based electronic payments and embedded financial solutions to a wide range of merchants, billers, banks, service bureaus, and card issuers. Usio operates card and ACH payment processing, card issuing, and bill presentment and payment to deliver convenient, world-class solutions and services to their clients. Investment summary: diversified and innovative. In the fast-growing fintech space, Usio offers multi-channel product portfolio in diversified industries. In 2024, they made 82.9 million in revenue, 14 to 16% expected growth in 2025. 26.6 million shares outstanding as of December 31st, 2024. 21.8 million shares public float, which means 4.8 million shares insider ownership. And obviously the 4 branches of business they have: payment facilitation, ACH, card issuing, and output solutions. So those are four horsemen and how we make money for Usio. All right, so revenue grew 7x since 2026. Obviously, that's cool to see. In 2027, you see we're at 15 million. Then you have 71%, 25 million. Then you had 28 million, 13, 32. So, and then 62. So there you see 21%, 71%, 13, 15, 92% in 2021. I think that's when they had that Voyager deal before that fell through. 2022, 12% at 69 million. We had 21% in 2023, 84.1, and then revenue in 82.9. And that's partly because the revenue, excluding the one-time payment, grew 12% from that COVID deal. So yeah, look, a 10.2% 3-year CAGR, that's great, and I think they can actually revamp that because, again, this is why no one's invested in it. because you can get better growth in the fintech space other places with bigger names. Like, so that's what this company has to work on. I think they can get there. And like we've talked about with Usio One and the things that they're working on and the growth they're had, like, you know, my bet is that they get there. But, you know, let's not be blinded to the fact of why, you know, the stock has been beaten down. All right. There's just other avenues people are just going to put their money in for more growth in the space. But that can change. We talked about the payment facilitation, PayFac, ACH, card issuing, output solutions. That's the fintech ecosystem. Payment facilitation. Payment facilitation, PayFac, is the latest innovation in merchant acquiring, providing frictionless merchant onboarding, enrollment, and automated risk and underwriting procedures, which have traditionally been very manual processes to provide for mass adoption and scale in short order by way of leveraged distribution model, one to many. Our differentiated go-to-market strategy creates loyalty and enhances customer value of the integrated software vendors, ISVs, we serve. ISVs are now able to monetize payments flowing through their software applications, turning payments from a cost center to a revenue generation business unit. So that was 35% of the revenue in Q4, includes all cards. So, you know, I'm still a little confused on all this, but essentially they help facilitate payments and they take a fee for facilitating that payment. But it's a high growth driver. And, you know, the company and everyone that talks about it is, you know, ecstatic about it. So, yeah, let's see. Yeah, for a $100 transaction, they net 25 cents, I believe. So in monthly volume, if they transact 2.5 million, they get $6,250 off that. And they make a lot more, like they transact a lot more. All right. As you see, the 35% in revenue of the eight of that. So ACH, and this is what Lewis said, as it's back in its growth phase, which is great to see because the margins are already high. It's back in its growth phase, HEH. Usio is the fintech leader in payments and not just certified provider that streamlines payment acceptance and minimizes processing costs. Usio provides ACH processing at a fraction of the cost than credit or debit cards. Usio is unique in that we are the longest tenured Nacha certified third-party sender in our industry. Has its own bank routing number and direct access to the Fed. Our highest margin business, ACH, provides cash we use to continue to fund and invest in our growth engines, PayFac and prepaid, the cards. So look, 21% of revenue, but the margins is 70% plus. Wow. Net revenue per transaction, 41 cents. On average, we earn 70 cents. So that's awesome. And it's providing the cash needed to drive growth for PayFac and our prepaid card issuances. So that's easy money. That's growing. And so that's what I was talking about. That's why you got to read, you got to watch the, listen to the conference call. All those card issuers that they have that we're going to talk about on the next slide, only 4 of them have ACH. So I'm guessing they were in the board meeting one day and like, so why aren't we getting to those guys? That's growth we haven't even tapped in our current market yet. And so that's how we're going to get the ball rolling. So I'm glad they did that. I'm glad they're doing that. Card issuancy. Usio operates as both the program manager and issuer processor, providing web and mobile apps, transaction processing, customer service, and compliance in a true turnkey solution. Fintechs, governments, nonprofits, and SMBs needing a platform for expense management, funds disbursement, incentives, per diems, loyalty programs, embedded payments, and more. Additionally, entities looking to migrate away from physical checks or cash payouts to virtual payment methods can leverage our card issuing platform. That's big time. We also offer analytics and insight into the use of funds spend via our reporting platform, 19% of the revenue to Q4. How we make money, client fees per card created. And I like how they break all this down. Like, so they do a great presentation. They just need to get it out there. Client fees per card created, 35 cents to $4. Interchange purchased by merchants, 1.2%, 2.122%. Cardholder fees, spoilage, 2 to 4%. Margins, 30 to 40, which are better for sure. 19% of the revenue. So yeah, if we can get these card issuance in clients, ISVs onto the ACH, that's driving so much more growth. And then output solutions, the fourth one, the physical one in the fintech world. Usio offers document design, print, and electronic delivery, or via the U.S. Post Office. Perfect for entities looking to reduce postage costs, automate the billing processes, and increase operational efficiencies. Output's customer base is primarily financial institutions, utilities, and taxing entities. So very slow pace institutions, ones that don't move to new systems often, but they're good to have in your base, your client base, because they're stable. As you see, 25% of Q4 2024 revenue was output solutions. That's a quarter, a straight quarter. It was the second, just behind PayFac, right? How they make money, 15 to 18 cents per print. Average postage per piece is 2 cents. Per electronic presentment, 3 to 7 cents essentially. And the average margin is 18 to 22. Obviously, they have a little bit lower margins, but the margins get better if they continue to get more print people on the electronic billing. So I'm actually really excited about this because I think there's a lot of growth for this electronically. So they just bought a new machine to roll high speed printing and inserting. They just bought this recently, I guess. Inserting 72,000 sheets per hour, 384,000 pieces per day. Roll time, piece level tracking, 800% validation. Yeah, full color, all digital, variable printing, 73 images per hour. Each roll of paper approximately 90,000 feet. But that's like the only physical. Well, they have more physical assets, but maybe this might be their only physical asset. I'm not too sure. But hopefully over time, people just get over to electronic billing. This is some of the revenues we've already kind of discussed. EBITDA. I don't really talk about that too much. The balance sheet, the cash is looking nice. Obviously, positive net equity, which has risen, which is awesome. So equity has risen, cash has risen. So yeah. So overall, good things are happening with them. And let's just go to Litchfield real quick. We've already talked about all this. So if you want to go to their research, you can go there yourself. But they dropped this on April 3rd, 2025. Back to basics, double-digit organic growth and expense control producing strong EBITDA, EPS, and free cash flow growth. Reiterate, buy, and $6 price target. Okay. Yeah, that's what they reiterate in their buy, which is they've stayed true to that. But if you want to go through their research, you can. They got it here. I guess I'll read a little bit of this. Usio appears to be in great shape to drive organic, profitable growth in 2025 and beyond. Revenue growth in 2024 was negatively impacted at the prior year, including the $12.1 million in one-off revenue from the NYC COVID incentive program. So revenue only grew 0.4% in 2024. Excluding this, organic revenue growth was 18%. For 2025, without this distortion, reported revenue should be in the 14 to 16% range, which is all organic. Combine this with strong expense control, SG&A only grew 3% last year, and the stage is set for consistent profitability. Not too many years ago, Usio would go back and forth between positive and negative EBITDA. It has now posted positive quarterly EBITDA for 5 consecutive quarters, and we think this will continue. It has also now posted 3 consecutive quarters of positive EPS, and we expect that EPS will be positive every quarter in 2025 and beyond. In the event in an economic slowdown, we note that Usio has a number of counter-cyclical revenue sources, such as high fees from processing return checks and small loan ACH processing. So they do have a counterattack if we do enter a recession. That's good to know. Our updated forecast with a detailed model at the end of this report is consistent with management guidance of 14 to 16% revenue growth for the year and an EBITDA margin of 5% to 7%. Except for its output solutions business, it has minimal capital expenditures as its service is mainly electronic. And the output business is just upgraded to a large high capacity printing and envelope stuffing machine. So it should be good for CapEx for a few years unless its volumes revenue really surge. Usio's board recently restocked its buyback program with a number of 4 million. Last year they spent 1.5 million on buybacks, and we think it will continue its pattern on keeping its buybacks below its free cash flow generation to build its cash balance. It ended the year with 8.1 million in cash from its 7.2 million a year ago. We expect the cash balance to grow approaching 10 million and be able to act on any attractive acquisition opportunities that may arise. So they think they get the 10 million. Maybe we get that at the end of 2025. That'd be nice. It employs rigid criteria in terms of what acquisitions. Well, let me go back. Management told us that the company is not actively shopping, but does regularly get presented with opportunities. It employs rigid criteria in terms of what acquisitions it would pursue. We can't see it buying distressed companies and attempting to rejuvenate them. In our opinion, every acquisition Usio has done has turned out to be successful, which is a claim many companies cannot make. It's true. So they're being prudent, and if they want to acquire something, that's good. And getting up to 10 million in cash would be amazing. We think that consistent revenue, consistent revenue, EBITDA, and EPS growth will consistently attract the attention of both fundamental investors and the quant models that dominate trading activity in the market. Usio shares are already seeing higher volume. If it can perform as we expect, consistent with guidance, we think the shares will appreciate significantly over the course of 2025. We reiterate our buy rating at a $6 price target. And if they're giving conservative revenue growth of 14 to 16%, if they pop off a 20%er, that'd be nice. That'd be nice. Let's just look at the price real quick. So it's sitting at 138. That's good. I actually bought shares at 127 today. And for some reason, Schwab was messing up. I only wanted to put like $25 in, but it was glitching out because the sky was falling in the market, right? Because this is April 7th, Monday, and we just been the stock market's just been falling, right? But I got in at 127 today, bought more shares, but I kept trying to get in, and so I actually dropped $100 in the market today. I'll put it all in Usio, and those shares are already appreciating today, which is cool to see. The PE sitting at like 11, 12, very undervalued for a financial tech company. You know, most fintechs are trading, 15, 20, 25, if not even higher. So you're getting a lot of bang for your buck. Obviously, we're trading well under revenues, well under 2025 guidance revenues. And so I think, and the 52-week high, the 52-week low is, 120 some for the year, right? So like it's like really low, like 125 for the year. So yeah, that's essentially what I got today for you guys. As you see, my count for Usio, my average share price is $1.65. I'm down 15% right now, but I have 800 shares. I got over $1,000 in it, so I got skin in the game. Just wanted to do this video and talk about my analysts. I know people have been wanting this, and I've been telling people. So hopefully you got a lot of value out of this, and you know, invest wisely moving forward. I'm not a financial advisor. I just like talking stocks. But with that being said, my name is Art Turner, Data Productions Media. Dreams are tangible aspirations where we scheme our dreams into existence. I love you all, and I'll see you in the next video.